Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. Today our topic is month-end closing of accounts. A month-end closing is an accounting procedure that ensures all financial transactions have been accounted for in the previous month. To ensure that they are giving accurate data, accountants will have to review, record and reconcile all accounting information. There is two types of accounts closing. One, month-end closing. Second, year-end closing. In this video we are going to discuss month-end closing. Here we will discuss multiple steps that are involved in the month-end closing process. Step 1. We need to make sure that all data entry in the accounting system is complete. Secondly, we need to check the accuracy of data entered into the accounting system. When we have completed this, then on second step, we need to go and reconcile our cash account. Means the cash account balance, what it is showing in the accounting system, it should match with the physical cash available with the cashier. Secondly, we need to reconcile our bank account. After that, we need to reconcile notes receivables. These are the post-dated checks what we have received from our customers. So whatever notes receivable balance is showing in our trial balance, it should match with the physical checks from the customers available in the drawer. Then we need to reconcile the notes payable. It is the post-dated checks what we have issued to our suppliers. So the balance what it is showing unpaid checks in our general ledger, it should be exactly matching with the checks what actually not paid. Then we need to reconcile the inventory. We need to make a practice of every month, and we need to reconcile our inventory by using the formula opening inventory plus purchases less cost of sales. So it will give us our closing inventory. So it should match with the inventory figure what is showing in our accounting system. Then AR reconciliation and AP reconciliation. All accounts receivable we need to make reconciliation, and AP accounts payable also we need to reconcile in total. Like accounts receivable, you can reconcile the accounts receivable opening balance at the starting of the last month. After that, you will add up the sales and deduct all the payments what you have received from the customers. So it should match with the total control account of accounts receivable in your trial balance. Same, you need to reconcile your accounts payable also. The opening balance of the accounts payable plus purchases less the checks issued or cash payments, and the balance, whatever the balance will come, it should match with your trial balance figure. On step 3, you need to amortize all prepaid expenses. For instance, if you have prepaid insurance, so you need to go and record each month expense for that prepaid insurance. You need to verify that this insurance payment what you have make, it is for how many months. Then go and divide the total amount with the number of months and you will get the figure. So that expense you need to record every month. And okay, so we make insurance expense debit here, and the prepaid insurance we make credit. Similarly, we have the business license fee for the year. So what we did, we divided the total figure with the number of months, and then we got this figure 1225. So every month we need to record in our books of month that this expense belongs to the previous period, okay, previous month. Business license expense we will make it debit, and prepaid license fee we make it credit. And the narration we give license fee for the month of Feb 2021. On step 4, we need to record all accrued expenses. For instance, like we have utility bills, okay? Normally in routine, we are receiving the bills after the month is finished. So we need to record that expense. We will not record this expense when we have received the bill. We will record this expense in the month to which it belongs. So what we will do, we will go to the 31st last day of the previous month. We will go and pass one entry that utility bills 1305 debit, and accrued expenses. Accrued expense, our liability, we will give it credit, that this is our payable. And we narration, we will give electricity bill for the month of Feb. Similarly, salaries, every month you are finalizing the salary when the month is finished, okay? Not in the same month. After that, after 1 to 3 days, you will finalize the salary sheet, what you need to pay to your employees. So that salary expense not for the next month, it belongs to the previous month. So you need to record at the end of each month, salaries expense, you need to give it debit, and accrued salaries, you need to give it credit. Similarly, all expenses, whatever it is, traveling or any other transportation of staff or overtime, whatever expenses that belongs to the previous month, you need to create the accrual for that expense. At step 5, you need to depreciate all fixed assets. For instance, like we have if we have automobiles, so we will go and depreciate every month the expense, depreciation expense we will give debit, and accumulated depreciation we will give credit. Similarly, the depreciation expense for office equipment, we will make expense debit, and accumulated depreciation credit. This accumulated depreciation is a contra asset account, and it will be deducted from the total fixed assets of in the balance sheet. At step 6, we will go and generate the trial balance. This is a simple trial balance. A trial balance is a list of all the general ledger accounts. Each general ledger withhold either a debit balance or a credit balance, but the total of debits and credits, both, it should match. There should not be any difference. On step 7, after finalizing our trial balance, we will go and based on the trial balance, we will create profit and loss statement and the balance sheet. An income statement, this is a format for income statement as a sample. So an income statement or profit and loss statement shows the company's revenues and expenses, as you can see here. During a particular period of time, it indicates the net income or loss of the company by deducting all expenses from the total revenue. After that, you will go and create the balance sheet. The balance sheet is a comparison of assets and total liabilities. A balance sheet is a financial statement that reports a company's total assets, total liabilities, and shareholders' equity at a specific point of time. It provides a snapshot of what a company owns and what the company owes. At the end, I will discuss all the summary of this month-end closing. Step 1, you need to make sure your data entry is complete and accurate. And step 2, you need to reconcile your cash account, bank account, notes receivable, the post-dated checks received from customer, notes payables, it is the post-dated checks from the you issued to the suppliers, then inventory reconciliation, AR and AP reconciliation. At third step, you will go and amortize all prepaid expenses. At fourth step, you will record all accrued expenses. Step 5, you will depreciate your fixed asset. Step 6, you will generate the trial balance. And finally, you will go and prepare your financial statements, that is income statement and the balance sheet. I hope the knowledge we have discussed in this video will add value to your professional skills. Subscribe my channel to learn more cool accounting skills. Don't forget to click on bell icon, like and share it with your friends who are working in accounting profession. Thank you.